Welcome back YouTube, Harry here, known as TradeSharp, and in this video we are going to discuss how do you know if the move is going to be a liquidity grab or if it is an actual break of structure for price to continue in a new direction such as a downtrend or an uptrend. It is actually very simple to define if it is going to be a break of structure or a liquidity grab, and there's a few steps you only have to take to make sure you don't get caught out in the wrong moves. So with that being said, today we're going to make sure that you guys are not getting caught out in a liquidity grab and you are following the actual move, and if there is a break of structure, you're making sure that you are catching that move towards whichever direction you want to trade. So that being said, let's get straight into this video. So I see it a lot of times that people, they go to take a move such as a buy at this point here, and then suddenly they see this wick here, and then what happens is price reverses on them and then they realize this was a liquidity grab. Or they see this move down here towards this area here, and then they see this wick towards the downside, and then boom, price bounces towards the upside and they're like, no, this is impossible. Look, we have a lower high, this made the lower low, the next move has to be down, right? That's only what makes sense. But in this video I'm going to show you why that doesn't always work, and you might think it's some smart money concept or something very complicated, but it's not, because trading is not supposed to be very complicated. There are just candles on a chart that we have to try analyze and try use to give us information to make estimated guesses on where we think price is going to go, right? So it's all a game of statistics and probability, and people who try to overcomplicate it will normally end up, not long-term successful, or this will be too stressful for them. So before we start, can I please remind you to hit that like button? I know it's a YouTube classic thing, but it really does help get this video to more people, and it really supports me. I mean, if we could get 100 likes on this video, that would I really appreciate that. And there's plenty of content on my channel. Go enjoy. Down below also is some free Telegram groups. It is not some sort of scam where you'll join my group and then I ask you to buy something. I don't have any of that. I just want a safe place in the Forex industry where you can ask questions and we can have good discussion about charts, because it can be lonely, and I do send my daily analysis there, so there's nothing hidden. So please go join that, and if you're new here, welcome, and subscribe if you enjoy the content. So let's get straight into this video. So as you can see here, I've marked this up, which you probably saw running in the beginning of the video here, right? And I'm gonna explain this because this is basically this is a good markup. This is recent price action here on pound yen, and this is, a lot of people would have got caught out here in the sells, and I'm going to show you why this is a very risky play, and why this was a liquidity grab, not an actual break of structure. So let's backtrack a bit first, right? So if we backtrack and we go and we see what the daily candle was doing at this area, and most likely the daily candle would have been bearish in this area. So let's have a look here, and this is what we see now. So we're like, all right, fine, we've had this huge move here. What do we expect next, right? So we can expect some downside here. If we go on the daily candle, you can see the daily candle is bearish here, so you can expect price to continue towards the downside. The 4-hour candle is also bearish here, but look where it's tapping into these wicks here. And then now going back on the 1 hour, we can see where we were, and now on the 30-minute, like I was showing you, we can see exactly where we are. So why is this going to be a liquidity grab, not a break of structure? Yes, this is breaking structure to the downside here, but what do we notice here? Well, what we notice first is we have a rejection wick here, which has also been a liquidity grab. So this can be seen as a liquidity grab. Why? Because it's touching a recent a resistance point back in the past, right? And you can see it's tapping into this block here that I have marked up, and you can see that this block extends all the way out into this area here. So you can see where this block is, and this is why I've marked out this block, because this is an important zone, right? So understand, you see this small area of support here, this cannot be disregarded. There's a reason why this happened, and people disregard it and say, okay, price will continue down to the downside. No, you can see when we had resistance here, price did some so not a clean move, right? But wherever we had the clean candles is where we got clean moves, right? So we had these clean candles to this zone, you got the move down to this zone. You see a nice huge liquidity grab here towards the downside, and then boom, a nice bounce up, and then you could see it bounced up and then we got the break of structure, which would technically be, I mean, I wouldn't trust a 15-minute, you'd have to go in a 1 hour. So your break of structure was above this candle closing above here, gave you a push, higher low, and then you got the move to the upside. But on the big scheme of things, we had another move down, which is what you can basically see here, right? Because we're only trading on a 1 hour chart. So why was this a liquidity grab? Well, if now we play these candles here, right? Watch what happens. So, okay, great. We get this move down, but look where price touches. Price touches this exact support here. So you're selling into this whole support zone. This can be extended like this. And you can see that this is not a correct place to be, you know, selling into. People would say, oh, this is liquidation, bang, stop hunt. This is not a stop hunt. This is price driving down and giving you a reaction off this point. If you're looking at this as the range, right? So if we draw this as your whole range here, right? So this is the area you're looking to trade in, right? Forget this. Let's say we're here, right? So now this is your first area you're looking to trade in. The move completed the area you're looking to trade in here, right? You see, it came to your area and then bounced off. So that's done. Now you have to go and look at your new area. So now we block this up, and this is what the chart looks like, keeping an idea that this area in the past was an area of interest. So we have this whole block into here. Now your new trading area is going to be, your first target is going to be at this zone here, right? Because this is where your clean candles, you can check my other videos where I talk about LTFs, which are basically LTAs, sorry, which are low traffic areas, which mean clean candles. Whenever you see a clean move down, you can expect a clean move up, right? These are where you're gonna get the easiest moves. So obviously selling into an area of strong support, we can see price came and rejected this area twice. So you can expect when price comes back to this area, it's gonna have a reaction, right? And what's more importantly, and if you guys watch my video about supply and demand, remember when I was talking about these zones and how powerful they are? When you see a huge move out of this zone, that means that this is a very strong zone. So high chance when this comes back to this zone, you're gonna see a huge move as well, because this is a very, very important zone, right? And you can see that once, and then now that price came to here, we actually tapped into the bottom of this zone, right? And you can see very clearly that obviously selling into a support is a bad idea. You're already at the bottom of the range. As I was saying, this is the top of the range, this is the bottom of the range. You want to be selling from the top to the bottom, not from the bottom to the bottom. Doesn't make sense. You want to be selling from the top of the range to the bottom and be done with the trade at the bottom of the range, which is your support, right? So understand that very clearly, and you can see that's exactly the reason why when we reach the zone, boom, we get that reaction, same as before towards the upside, right? So now let's talk about when can we actually look at a break of structure, right? So you can see I marked out here, so let's skip to when it reaches there. So price continues up now, and you can see what's very important here is that we're waiting. Okay, boom. First of all, there is a small break of structure here, right? You can see this candle closed below your last previous structure. So when structure initially broke was here, right? And understand this, remember what we were saying before, where were we in the range? We were at the bottom of the range, but if price is still bearish, closing below this, not breaking the higher time, because remember we're only on a 1 hour time frame, so we're not breaking the higher time frame resistance. And if I remember from this week, this is your daily resistance zone, right? So this area here is your daily resistance, and if we're not closing above that, we're still not out of the higher time frame zone. So guess what happens? Now we're actually selling from the top of the range. So you're selling from the top of the range to the bottom. So now that makes sense to look at a break of structure. So here's your break of structure here, the first break of structure. It comes back, retests this area on the lower time frames. If I were to show you, see, you get one retest, you get one fake out, right? Because it's just retesting this area. It's not broken above the most recent resistance here, right? So it hasn't broken above that. Now what ends up happening is you look for the downside move, right? And what happens on the downside move? Well, you want to, your clearest support is this one. So what you want to see is a candle closing below here, right? So if we slow this down, and remember we're selling now from the top of the range to the bottom of the range, right? So now what you can see, good, we make a lower high here. Let's see when we get our lower high. Boom, there we go. That's the candle closure there. That's your structure. Respecting this high, very important. Lower high, lower high. You see that? Respecting this high. This is your small uptrend intraday on the higher time frame, still respecting this high, continuing the move down. And this is what's very important here, right? So now your most recent structure, you can see the reaction off here. The reason we got this move here was why? Because as I showed you on the first move was of this, right? So this is where you're not going to be caught out. But then what you get here, well, you get that candle closing below, right? Once that candle closes below, that is the break of structure. So what is very important is a break of structure can only happen on the candle closure, because that's your confirmation. This is not breaking structure. This is price retesting previous structure, not breaking it. So now you can see this is a retest, not a closure. Now when you get the closure, that's when you get the move, right? And this is where you start looking for positions on lower time frames, of course. But this is where you get the move, right? So now let's see what happens if we continue on the chart. So let's see if we get another break of structure, right? So now we continue down. Again, we created a support here, right? So this is your new support. What do we look for? Well, obviously we're bearish. And if you want to play this game a little bit smarter, what we'll do is we can see this candle close at the top of the range here, right? The candle close at the top of the range, still respecting this high. Again, this is what you're going to see. So let me clear all of this, and we're going to go and we're going to quickly wrap up this video by showing you guys how this is another liquidity grab here. Very clear liquidity grab. Obviously, we're in a bearish move. You guys are going to try counter trend trade, and that's where you're going to get caught out and say, oh, it was a stop hunt. No, we're in a bearish move. We're looking for price to continue down back in towards our box. And of course, when it reaches this box, guess what? It's going to find support, right? And it just works like that. So we can see we have a resistance here. Is it a break of structure if we're getting a closure? Yes. Have we got a closure? No. Do we have a wick? Yes. Liquidity grab. We close bearish. What do you expect next? High chance we have to retest the lows here. High chance. Right? So what are we going to do? We're going to come back and retest the lows most likely. Why? Because we close bearish at the top of the range. Remember in the beginning of the video, I told you you want to be selling from the top of the range to the bottom of the range, not from the bottom of the range to the bottom. You already reached target. So what happens? Boom. Hits target, right? Now we get the break. Do we get the break? Yep, there's your closure. Guess what? Taps your support exactly, and you have a reaction. Now what happens? Well, this is the box. Do you want to be trading at the bottom of the range? No, that was your trade from here. Now guess what happens? It starts messing about. Why? Because it's reached that box. You see, so now we'll probably get a reaction once London session comes. Boom, gives us a reaction. Now what's very important here is, look, we're respecting these highs. Still no break of structure. Yes, break of short time frame structure. London giving us a pullback. New York will probably give you the drive down. Why? Because we're respecting structure, and there's the drive down, breaking through the higher time frame. So that's how you don't get caught out in these moves, is you have to follow trend, wait for candle closures, and I can't emphasize how much follow trend, right? Wait for candle closures and do not sell into strong supports or resistances. It's as simple as that. I gave you a little bit of an in-depth video on how to do it and just looking for it. And if you let me know in the comments below how easy this video was to understand, because it was maybe a little bit difficult. I found I could have probably made it a bit easier to comprehend. So just let me know. But this is more of a raw type video, just me talking to you guys really on basically what I'm seeing in the charts and talking to you out of the past week in price action, right? And how not to get caught out. So with that being said, take care, trade sharp, and until next time, peace.